And welcome into Making Sense, or it could be making, where did my sense go? Because it seems like in today's environment, it can be up, it can be down. A lot of things are causing this to happen. Brandt McDonald's back with Invista Advisors. You were just here basically
7-8 weeks ago, 2 months ago, roughly.
And we were kind of closing out 2021, taking a peek in 2022, and we want to kind of go back.
Yeah.
we,
Yes, I think we should. Let's go back.
Amen.
So 2021 was characterized, obviously, by several waves of the COVID and all of that, and then this inflation story that we've talked about so much. It was gaining momentum as we were winding up 2021. We talked about that in January here, and looking at the numbers, both the producer price index numbers as well as consumer price index numbers. Not only were they up year over year on a monthly basis, but what we were seeing in January over the previous few months was that it was gaining momentum month to month.
Yeah.
And here we are now in March.
It's tough when that happens.
That's exactly right. And we have continued that trend over the last 2 months. In fact, it's getting quite worse. We have characterized this as sort of being now, we think, probably maybe in the second or third inning of an inflation super cycle. And so let's talk about what the Fed has done since then. The Fed now has said that they are going to raise interest rates, which we know they are doing. They want to wind up their balance sheet and start to allow the balance sheet. In other words, investments they bought with money they created out of thin air, they put on their balance sheet. It was an exercise whereby you go in the market, you buy these securities, and you leave behind a lot of cash to stimulate the economy. Now they're doing the opposite. And so as they do this, they're draining all this money out of the system, and that's going to be quite a challenge, an incredible challenge. And I think that as we move forward and look at the impact this is going to have on asset prices, whether it's capital assets like real estate and others, it's going to be really quite a challenge for people. There's no question about it. And so I just, we have urged our clients to be very, very mindful of the fact that this environment is not like what we've seen in the last 10 years or even 20 years. You and I were talking earlier off the air about this, that the average person doesn't think about buying gold or silver necessarily, or buying commodities, That's not been in our sort of vernacular, really, if you think about it over the last 10 years. Now it's beginning to be that way. So as we move forward and we monitor what the Fed is doing, we have to be very, very careful, because this inflation story is very real, and it's going to have a profound impact.
So if we take measures to cure this from the top, is energy and getting the gas back in line, is that pretty much at the top of the list?
I think,
or is it something we don't really need to be addressing?
I think it has to be. Obviously, energy is a very, very volatile segment of the consumer price index. The CPI actually, and most people don't know this, but the formula they use today versus what they used in the 70s has completely changed. If you use the old formula and take the same inputs and put it into the old formula, the inflation rate is actually closer to 15%, not the 7.5% that's being reported in today's CPI. But a large component of it is energy.
Yes.
We have to be a little careful with that, because energy can be volatile. So sometimes we'll take out energy and we'll take out food to look at the core prices. And core prices are accelerating at a very, very rapid pace. But absolutely, energy and food are the two critical components that the Fed needs to hone in on. We all know about these geopolitical events that we've had to be concerned with recently with the Ukraine and Russian situation. So we've all seen that front and center. But here in the United States, we have a tremendous amount of energy, whether it's natural gas or crude oil or shale oil. Of course, we know that a lot of that's been shut down by our current president. So you take that supply off the market, it's going to have an impact as well on the underlying cost of energy. So you think about the bottom 1/4 of the population as an example.
Yes.
How in the world are these people who are making $35,000, $36,000 a year able to survive in an environment like this? It's the worst form of tax you could ever imagine.
Yes.
And so it's quite concerning.
That bottom quarter of the population, they fill the gas tank. That's an extra $15 a week. That means you don't go to Walmart, you can't go to McDonald's. So the trickle-down effect is amazing.
It's incredible. And I don't want to get too complex, but when you look at the CRB index or the food component, the actual raw movement in underlying food prices as a commodity is really up closer to 18%. And it's not being really truly, in our view, accurately represented in the CPI. So I think the damage that's happening to the average American consumer is really quite historic and not being adequately reported on. But we're sure seeing it show up in consumer spending patterns and things like this. Obviously, in the commodities markets, we're seeing that as well. But the bottom line is, from an investment perspective, this is a time in a situation to understand that even if the Fed raises rates by 2 full percentage points, we're still running at negative real returns. So if you take inflation at 7.5 minus 2, you're still negative 5.5% real returns. Very, very accommodative by the Fed, even in that environment. So this inflation situation is going to be with us, and it's going to be with us for a long, long time. We have to prepare and manage our portfolios accordingly. If our viewers would like to get a hold of you, it's Invista Advisors, and we're going to put the phone number on there, and you can come in for a assessment and then see if that's the right fit. Yes, that's exactly right. And it's a free consultation. We're registered investment advisory, and we love meeting new people. Great. Well, thank you, Brent. We're going to get you back again. And just remember this, it's your money. Take care of it. Watch over it. But make sure you're watching it. We'll be right back right after this.